Hello, good evening, guys. So today I'll be sharing my whiteboard with you to help us analyze the ABC stage of our entries, the ABC stages of our entries. And in these entries, we have the first stage, which is the A stage, the second stage, which is the B stage, and the last stage, which is the C stage. Now, the A stage, what do you want to see? The A stage, yes, you want to see a break in market structure, a break in market structure. And outside that, after that, you want to see the confirmation of the break, the confirmation of the break. And I hope you all understand how to confirm the break of the market structure. Now, in this first stage, for example, the market is trending up. We have this up, down move. The market trends up, up, up. Then the next thing we have is a break in the market structure. This is A. Now, once we have A, this is the first sign that the market is ready the market is ready to reverse. Now, when we have this break in the market structure A, the next thing we want to see is the confirmation. You know, this is the first break A. The next thing we want to see is the confirmation. Now, how do we see this confirmation? We have to go down to the main time frame of this time frame. For example, if this is the 1 hour time frame, you have to go down to the daily time frame. Now, when going down to the daily time frame, we want to ensure that the daily time frame closes below. The daily time frame closes below this line. Closes below this line. This is what we want to ensure. And when we have a close below this line, this is the first sign of A. Now, B is going to be the stage, that particular low, where our main time frame bar closes from. So you want to mark that spot as B. Now, in step B, stage B, to confirm the break, and after confirming the break, the next thing you want to do is what? You wait for a correction. Now, waiting for a correction, stage B, waiting for a correction. You wait for you confirm the break. Oh. You confirm the break. Then you wait for the correction. Now, at this point, you want to wait for the correction. And what's the correction? This correction is this. Price is going to move back from this and go back up to form what? X. Now, mind you, let me explain this X. If price is going to continue with this trend, the S will either go above this point and continue to go back up. But since we are talking about how price completely reverse, so we can get the entry. For example, one can get the entry to this market for a sell. What price is allowed to do is this. Price is allowed to form the X from this point. Then after forming the X, then we have a drop. Now, note this. When market form A and B, that does not necessarily mean that the market is ready to drop. No. When the market form X, A, and B, it does not mean that the market is ready to drop at all. That does not mean at all. When the market form A and B, it is just trying to tell you that that is the first stage of the formation. Now, this is the first stage, A and B. Now, the second stage is what? The formation of this X. I call this X the aggressive C before, but now make it turning it to X so that you will not confuse yourself. Now, when market form X, now X can form anywhere. It can form anywhere as long as market did not get to above this particular high. S can be formed anywhere. Now, when X formed, then we'll now have C. Now, it is the formation of this C, that will now confirm that the market is ready to drop. And what will the market do? The market is most likely to go back and look for another block region. Another block region can be around there or can be around there. Retrace back to the other block region, then drop. This is what price is likely to do. At stage C, they are going to break the low of B, retrace back to the other block. Now you want to put your entry around there and stop loss around there, or you want to enter around this close. Then you join the sell. Now at stage C, stage C, you want to wait for X, you wait for X to form. Then after X to form, a close. The next thing is a close below the B level. A close below the B level. Now, when price close below this B level, that is when we now have a confirmed sign that what? The market is set to what? Reverse. Now, take note that after forming this C, the market will most likely form another low, lower than this C, in order for it to do what? Keep on following market structure. But if we are trading against the normal trend, please take note of this. If you are trading against the normal trend, the market can do this. When trading against the normal trend, the market can do this. We have A, they go up, form the X. Now forming X, the market drop, form C. The market can do this. Remember I said it's going to form a lower low. You can go back up, come down to this point like this, and do what? Go back up. Break, forming under A, B. Then coming down, X. Then going back up, C, to continue this bullish trend. So it depends on what you are trading. If you are trading like with a trend, the market can form this very quickly. But if the trend is a bearish trend, then we are very, very sure that the market will keep on going down. Now, let me give us an example with the chart. Let me get another example with the chart. Let's take this one more. I'm going to clean all this. Now, this is it. Stage by stage. In phase A, stage 1, they are going to trend, break market structure. This is the stage 1. Stage 1, confirm the market structure break. They will break market structure and confirm the market structure break. So this is now level A, and this is level B. Now, in stage 2, that's the end of stage 1. Now, stage 2, they are going to form X. Let me use a different color. In stage 2, they are going to form X. Now, like I said, X can be anywhere. So far, they did not go above this point. So S can be anywhere. Now, that is stage 2. Then they are now going to drop it to close below this stage. Now, stage 2 will end at the formation of C. That means close below C. Now, look at what stage 3 will do. Stage 3 is now what? A retracement back to the other block region, either around this point, or they might even take it around this point. But they are still going to respect the I. Then they will now drop. Then they will now start following market structure. Now, these are the 3 stages: 1, 2, and 3. These are the 3 stages that they are going to form. These are the 3 stages that they are going to form. Now, let us look for a practical example.